Hello and welcome to the FOMC video preview, where once again the FOMC are expected to taper their asset purchases by $10 billion per month, leaving their rates unchanged and not make any major policy changes at this monetary policy meeting. All focus is likely to be on the summary of economic projections from the Fed, where not only do they release their growth, inflation and unemployment expectations for the years ahead, but they also say where they see rates in the next year, the next few years and in the long term. In terms of these forecasts, their GDP is expected to be revised lower, especially for 2014. That's after the very weak Q1 growth that we've seen. However, this was mainly due in part to the weather. In terms of the inflation and unemployment, inflation forecasts are expected to be increased, whereas unemployment forecasts are expected to be decreased, and as such this will be moving nearer to the Fed's mandate. So this follows Tuesday's CPI reading, which did come in stronger than expected, and also the recent unemployment picture in the US has been pretty good, with unemployment continuing to trend lower this year. So with these moving to nearer the Fed's mandate, this could mean that many see rate rises happening sooner rather than later, and indeed sooner than the market expects, which could mean that the Fed's dot charts may have a hawkish tint to them. In terms of this, last time most officials on the Fed saw the Fed raising rates at least once by 2015, and indeed by a whole percentage point by the end of 2015. So it'll be interesting to see if this is still the case after these latest round of projections. One point of note is that the composition of the Fed has changed quite a lot since the last meeting, with the new Vice Chair Stanley Fischer and Lael Brainard, another board member now on the Fed. However, Brainard was signed up to the Fed slightly too late to submit her projections. You've also got Mester, who has replaced Pianalto on the Federal Reserve, and Stein has left the Board of Governors. So it will be interesting to see how these new projections affect the composition of the Fed's projections. So the things that we're looking out for then, as expected, the Fed are likely to taper by 10 billion, but the key will be on this summary of economic projections, where they're expected to lower their growth forecasts, lower their unemployment forecasts, and increase their inflation forecasts. As a reminder, there will also be a press conference from the Fed Chair Janet Yellen to follow, where she is expected to once again say that the Fed policy will remain accommodative. Anyway, that's all from me. Thank you very much for watching, and I hope you have a great day.